Good day everyone, my name is Benjamin and I'm from Phillip Futures. Today we'll be covering on Q2's outlook for gold in 2018. There will be three vital elements to support gold's performance in the coming quarter. So the first primarily being the US Fed's monetary policy, the second being geopolitical factors, and the third being the US dollar performance. The Fed looks poised to make 2 to 3 more rate hikes in 2018. Market expectations are gearing towards an impending rate hike at the end of the second quarter. Crucial variables that will dictate the Fed's decision will include positive inflation results, tighter labour markets and robust consumer spending. As illustrated on the chart by the top left, US labour markets have continued to reflect a decline in unemployment rate. Consumer confidence on the top right have notched a record high in February 2018. US inflation rate have further reported for robust results at 1.8%. US indices have also supplemented prospects of a stronger US economy as the S&P 500 demonstrates for an upward trending curve. The following economic data demonstrates for supportive conditions in the US economy and also for an impending interest rate hike in the second quarter. So what happens traditionally when a US interest rate hike occurs? As in 2017, we saw a softening of the precious metal as the markets move towards an impending hike. That's largely due to a prospect of a stronger dollar weighing in on the precious metal. Those support levels are generally seen at previous major bottoms. On the subject of geopolitical risks, gold will continue to receive fundamental support as investors will continue to place their faith on the precious metal amidst uncertain market conditions. This is largely due to gold's reputation as a safe haven asset. Trade protectionist policies and talks of withdrawal from NAFTA will weigh negatively on dollar prospect, thus giving gold a stronger outlook in the second quarter. As we focus on Greenback fundamentals, we postulate for a persistent weakness as a bulging fiscal and trade deficit continue to lay pressure on the dollar. The Trump administration's protectionist policy on trade will do little to lift the dollar index in the coming quarter in light of current market conditions. As we zoom in on the dollar, we observe for a prolonged bearish momentum despite the Fed's monetary tightening policy. Hence, we do not expect for a strong recovery to be seen in the second quarter, though gold prices can be expected to take a gentle dip before an impending hike, but also recover gradually as soon as the market unwinds. Thus, we assess for bullish momentum to be seen within range for the most of the second quarter. Gold prices will sit above the upper levels of the Fibonacci retracement charts. Key support levels that you may want to pay attention to will include the 1303 mark and the resistance level of 1365. However, we postulate that there will be a gentle softening of gold prices at the end of the quarter if an interest rate hike comes to pass, though fundamental support levels will continue to resist a landslide in prices. As such, these are the fundamental drivers that investors will want to look out for in the second quarter. So the first being, how does the NAFTA talks and US trade tariffs unfold? The second, the Fed's decision on an impending rate hike. The third, Greenback's performance. And the fourth, geopolitical risk in Q2. With this, I'll end today's episode of Market Watch. Subscribe to us on PhillipCapital YouTube and Facebook for more Market Watch videos. Thank you for watching and have a pleasant day ahead.